China appears to have resisted currency appreciation all through 2025. China inherently has always resisted currency appreciation. And during phases of dollar weakness, more likely than not, the yuan tends to strengthen the least. Apart from various reasons for such behavior, maintaining export competitiveness is an important reason why China controls its currency, particularly on the way down towards an appreciation. The yuan has appreciated, right? How can such appreciation be linked to export competitiveness? Export competitiveness is linked more to a depreciation, right? This is where we need to view the yuan's movement in context. Analyzing yuan movement in context, one notices that the currency has appreciated the least amongst emerging market currencies in 2025 only after Taiwan and South Korea. China's currency policy has always veered towards stressing on stability over that of volatility. And that explains why China chooses a managed exchange rate regime. Here, the central bank sets a daily midpoint rate against the US dollar, allowing the yuan or the renminbi to trade within a set band, and it would then intervene as needed to maintain a certain stability. Let us now look at the yuan from another perspective. Remember here that countries with high inflation tend to have elevated levels of depreciation, and the opposite tends to happen for countries with high deflation. China has been in deflation since 2021. And when one examines the same currency movement after adjusting for inflation, here deflation, one notices that the yuan has much more room to appreciate, something it is resisting to do. And therefore, this makes the Chinese yuan more undervalued in markets' eyes. More undervaluation here means that there is much more room for the currency to appreciate or strengthen. And this adds another layer to export competitiveness we just spoke about. Let us now look at the situation briefly from China's perspective. Practically for China, a stronger yuan during deflation episodes would worsen this deflation further. Why? Because a stronger yuan means cheaper imports that keep deflation broadly unchanged or even tends to deepen the deflation sometimes. Lastly, while 10-year yield spreads with the US can be broadly used to explain the directional movement of the yuan, consider this. China runs a strong trade surplus with the world, meaning it exports much more than what it imports. And generally, trade surplus countries have a tendency towards currency strength. China's 12-month trailing trade surplus is up 70% over the last 4 years, while the yuan over the same period is weaker by 9.4%.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.